Welcome to Investors Insights, episode number 153. We want to thank you for all the comments and questions we've received. They help us bring you the information that you want. And with that said, we have a lot of insight to share with you about the markets and the impact on your investments. So let's jump right in.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Gentlemen, great discussion today. Some good debate. I think probably the theme might be interest rates, ECB. I think we need to bring that up and how it impacts people's portfolios. Trey, you brought up some good points in the meeting this morning. You want to go back over those? I think our viewers need to hear that.
Yeah, thanks. So last week on Thursday, the European Central Bank came out and pretty much threw the kitchen sink at the markets. They lowered the discount rate, which banks get to try and to further negative to negative 0.4%.
Sure.
They reduced the overnight lending rate. They also increased their asset purchases by about a third.
Right.
And then extended how long they're going to add assets. And then they also now include corporate bonds and what they're willing to buy. On top of that, they now will loan money to banks at zero to negative interest rates for up to 4 years for the banks then to loan out. So pretty much they're just saying, try everything. And the reason this is important for U.S. investors is the weaker European central bank policy is, the stronger ours looks relative.
Right.
This is going to likely strengthen the dollar. This is an effective tightening, so it could push the Fed's tightening window out a little more. It also could hurt our exporters. Stronger dollar means lower oil prices. Oil is priced in dollars. So that's how impactful it can be. The European Central Bank being probably the second most important behind the U.S. in terms of their policy, how much it affects the world economy.
Yeah, I think we have a lot of investors that go, well, it's Europe. Why does that have to do with me here in the United States if I don't have any international money? But part of the world sneezes, we feel the impact of it.
Exactly.
So,
global.
Yeah. And Ashley, you brought up that maybe we've got some antiquated things we're looking at here.
Exactly. To Trey's point on central banks around the world, because of aging populations we've seen, deflation, a lot of what we've talked about on the vlog. A lot of central banks are looking at the inflation target now, which is about 2% roughly around the world, as to whether that really even works anymore, because it's such in a narrow range. Like Trey mentioned, the European, you go negative. There are a lot of economists that have said maybe it should be more like 4%. Some say 1%. But there's a lot of discussion now about what the paradigm should even be on inflation rates. So we're looking at that.
Right. Yeah, that's good. And then, Bobby, just talk a little bit about last week and what we're looking at this week.
Yeah, so last week was all about the European Central Bank and the actions they took. They brought out the bazooka. And so this week, attention turns to the Bank of Japan tomorrow, our Fed on Wednesday, and the Bank of England on Thursday. So on Wednesday, we don't expect our Fed to raise rates. Right. So even though some of the numbers look better than they did in December when they rose, I think it's going to be very hard. The European Central Bank, with all what they came in last week and did, we don't want the dollar to get out of control, and so we're watching that closely.
Right, and we've been saying for some time that we didn't see the Fed raising rates at this point.
Yes. I think June at the earliest.
Right,
and so hopefully they won't come out and surprise. We don't expect that. So we'll be paying attention to what they say, what the statement is. Is it a hawkish tone or a dovish tone? Then we also have a lot of economic numbers coming out. Retail sales tomorrow on Tuesday. Inflation numbers on Tuesday, Wednesday, and then important consumer sentiment on Friday. So busy week ahead.
Right. We still think we're in a dangerous market in terms of a bear market. We haven't gotten any positive signals yet that this thing is turned, but we're seeing some glimmers of hope that we may be heading that way. But we will keep you updated on that. So thanks for watching. We hope you have a great week and keep those questions and comments coming to us. Thanks again.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.